Welcome back. You're still watching Markets at Noon, and joining with us is Sushant Bhansali, CEO, Ambit Asset Management, to talk about the larger picture, the long-term story of the market. Sushant, good afternoon. Thank you so much for giving your time to ET Now. Mansi, this side, is a pleasure talking to you right now. Sushant, to start with, and it's the PM's GST bonanza which has given the positive cheer to the market. And everywhere, as you see, we did see the start of the market. And of course, this news in itself was such positive for all the sectors. The GST cuts are expected to see a spark of around $13 billion consumption boost. Now, big number, and that too the rationalization of GST rates could provide a strong tailwind to the FMCG sector. The move coming ahead of the festive season is more important, and it will surely translate into stronger volumes, better consumption story and sentiments overall. What's your take on the FMCG sector, because we did see a sideways action in the sector for, let's say, last 2 to 3 years?
Sure. I think post-COVID, the recovery, especially on the rural side, was not that great compared. The urban was doing well. So last 2-3 years, I think most of the FMCG companies growth triggered because urban markets, they were already more penetrated on most of the categories. On the urban side, it was the story. But on the rural side, they were increasing their penetration, and that took, I think, a knock-off in the last 2-3 years. But the good news is that rural economy seems to be coming back. The growth volumes compared to urban is much better in the last 1 or 2 quarters. And we believe that rural will lead the recovery for FMCG companies. And along with that, the ones with the GST cut expected around Diwali time should lead this recovery, I think, much more. So in the last 2-3 years, underperformance definitely will help, I think, get much more returns for the next 6 to 18 months for this sector.
Sushant, but then what's going to be your specific themes? Because we're talking about consumption theme, which is a very broader spectrum. But within that also, what according to you is expected to lead, and areas which were not shining earlier will also shine according to you?
Yeah, I think it's a two-pronged approach. One is on the rural side led players, where they have a good distribution network. I think they will do really well in the next 3 to 6 months, let's say H2 of this year. And the other side is consumer discretionary, the higher side, where there were 28% of GST. Those sort of items, I think that sort of consumption, if that sector gets the GST rate of 18%, as it's widely speculated right now. There's no confirmation on that, but if that plays out, I think that will be another lever of growth, and that's why we are seeing those trades today in such names.
Hi, Ankur, this side. I want to understand from you the point that the GST announcement has not been made yet. Of course, there's a guidance which is coming from government, and markets has, of course, welcomed it. But in this scenario, what should investors do? Should one put their money in market at the current levels, or do you think that one should wait and watch?
It's a good entry point, I would say. So you might want to stagger slightly, but just keep on waiting will not yield any results. I think markets, especially large caps and mid caps, are at decent levels to enter from 1 to 2 year perspective. And if you have investment horizon of 3 years plus, then any time is a good time to invest. Our recommendation to our clients is that to top up for existing accounts and start investing in the last few weeks. We have been telling them, because all those global uncertainties have given good entry points in the last 1 or 2 months. Post March, I think the market took a good track, and April, May, June all the good. But July and early August were quite negative for markets, and thereby giving good entry points. Given that the interest rates are getting lower, the tax cuts which were announced in the budget are now taking effect, and now with GST coming into play, the Diwali and the festive season, and post that the wedding season might have an upbeat turnaround and results, and thereby take markets to new highs. So it's a good time to enter in our view.
I hear you when you say your positive outlooks on consumer discretionary staples, auto, apparel, agrochemical, consumer durables, even before the festive season. And yes, this news flow will add up to that. But Sushant, do you have a view on the defense and the shipbuilding space? Because the current government is very watchful about the development of the defense sector in particular. And even in the latest speech, Prime Minister Narendra Modi did highlight the sector by saying that Mission Sudarshan Chakra, via this mission, they are planning to develop indigenous aerial defense system by 2035. A long-term play, however, but what's your take on the defense space? Expensive valuation, but then now after a sideways momentum, we see the sector picking up again.
Yeah, definitely it's a great long-term bet and long-term story remains intact. But at the same time, in the short term, if you look at the government finances, they are struggling. The direct tax collections are not growing the way they were in the last 3-4 years. So there is some stress on that. Indirect tax now with the GST, if these rate rationalization happens, there will be some more impact on the government finances. And capex, I think, will have to wait for a while. We didn't see any positive momentum in the budget, and I think the government's hands will be a bit tight for short-term flow into this theme and sector. But long-term story remains intact. Probably the sideways movement might continue for some more time, in our view, and there might be better entry points later, probably into this theme.
All right, Sushant, with that, we let you go. Thank you so much for taking time out and helping our viewers navigate their strategies for the portfolio today. Thank you.
Thank you.